Let's talk about a week that redefined global finance. In just 7 days, the rules of money, markets, and power were rewritten. Institutions once thought invincible teetered on the edge, threatening a domino effect that could have triggered a new Great Depression. Decisions made in secret meetings would impact billions, from Wall Street titans to everyday savers. This is the story of how stability vanished overnight, and the world stared into the financial abyss. We'll break down each day what happened, why it mattered, and what it means for your money today. Let's dive in. Monday. The opening bell rings and panic erupts. The Dow plunges hundreds, then 1,000 points, wiping out billions in minutes. Traders shout, algorithms dump stocks, and the market spirals. This isn't just numbers on a screen, it's people's life savings, pensions, and futures evaporating. The trigger: toxic mortgage-backed securities, once rated AA, revealed as worthless. Rumors swirl, a major bank is about to collapse. Fear spreads like wildfire. The interconnected global system means a US housing problem now threatens the world economy. By the closing bell, confidence is shattered. Headlines scream meltdown. The question isn't when will it recover, but how much worse can it get? Day one ends with terror, not relief. Financial leaders scramble for answers, staring into a black hole with no clear way out. The chaos has begun, and the clock is ticking. The world braces for what comes next. The stage is set for a week of unprecedented uncertainty. The dominoes have started to fall. Tuesday. Global markets reel. All eyes turn to the central banks. The Federal Reserve and its counterparts launch a coordinated emergency intervention. Interest rates are slashed. Quantitative easing is unleashed. Hundreds of billions injected to unfreeze credit. The message: we'll do whatever it takes. Markets rally, briefly. Relief surges, then fades as reality sets in. The drastic action reveals just how close the system is to collapse. The intervention buys time, but doesn't fix the core problem. Banks are still drowning in toxic assets. Investors realize this is a painkiller, not a cure. The market closes up, but nerves are frayed. The world holds its breath. What happens when the money runs out? The system is still fragile, and the underlying rot remains. Central banks have fired their biggest shot, but the crisis is far from over. The countdown to the next shock continues. The sense of dread lingers. Day two ends with more questions than answers. Wednesday, the government steps in with a bombshell, a $700 billion bailout, TARP. The plan? Buy toxic assets, inject cash, and rescue failing banks. Markets surge on the news, but public outrage explodes. Why bail out Wall Street with taxpayer money becomes the rallying cry. Congress is flooded with furious calls. Politicians are trapped between economic disaster and voter anger. The debate is fierce. The fate of the global economy hangs on a single vote. Optimism fades as political risk grows. The market's gains evaporate. The rescue plan is now hostage to public fury and political gridlock. The world watches, will Congress act or let the system burn? The crisis has become as much political as financial. The solution is on the table, but far from certain. The stakes have never been higher. The clock is ticking, and the outcome is anything but clear. The system's survival depends on a deeply unpopular decision. Day 3 ends in limbo. Thursday. The crisis goes global. European and Asian banks, loaded with US mortgage securities, face massive losses. Stock markets from London to Tokyo plunge. Some worse than the US international banks aren't eligible for the US bailout. They're on their own. Credit markets freeze worldwide. The LIBOR rate spikes. signaling total distrust. Governments scramble. The UK nationalizes banks. Iceland teeters on bankruptcy. Emerging markets crash as capital flees to the safety of US treasuries. The dollar paradoxically strengthens, even as the crisis began in America. Every major economy is now in crisis mode, fighting fires on all fronts. The hope that a US bailout would contain the problem is gone. The world financial system is a web of falling dominoes. Helplessness sets in as events spiral out of control. The meltdown is now truly global. Friday. The crisis claims its biggest victims. A legendary investment bank, once too big to fail, files for bankruptcy. The shock is seismic. Trillions in transactions freeze. Partners face huge losses. The government, stung by bailout backlash, lets it collapse to send a message. But the fallout is immediate and catastrophic. On the same day, the world's largest insurer teeters on the brink, brought down by risky credit default swaps. The government reverses course, nationalizing the insurer with an $85 billion rescue. The inconsistency, letting one giant fail, saving another, sends markets into chaos. No one knows who will be saved next, or who will be left to fall. The market nosedives, erasing all recent gains. The rules are gone. Panic and confusion reign. The financial landscape is littered with fallen giants. The system hangs by a thread, dependent on desperate ad hoc decisions. Day 5 ends with the world in shock. The sense of crisis deepens. The weekend brings no relief, only more fear. With markets closed, panic spreads to Main Street. Bank runs erupt as people line up to pull out cash, fearing for their savings. The images evoke memories of the Great Depression. Investors flood brokers with sell orders, desperate to escape the market. Public anger boils over, blaming Wall Street and Washington for the disaster. Politicians face a tidal wave of calls demanding they reject the bailout. The rescue plan, meant to calm panic, is now threatened by it. The cycle of fear feeds on itself. By Sunday night, the mood is apocalyptic. The system is on life support, trust is shattered, and the world stands on the brink. Everyone wonders, will there even be a financial system on Monday? The stakes have never felt higher. Day 7. Instead of collapse, a fragile stabilization begins. Congress, under immense pressure, passes the $700 billion bailout. The Federal Reserve and global central banks unleash unprecedented support. Unlimited dollar swap lines, guarantees for money market funds, every tool is deployed. The bleeding stops, but the pain isn't over. The economy heads into a deep recession, but the existential threat recedes. Surviving banks face new regulations. The era of unchecked risk is over. Dodd-Frank and other reforms reshape finance, aiming to prevent another disaster. The crisis exposes the dangers of leverage, complexity, and too big to fail. It also shows the power and limits of government intervention. The world is changed. Less trust, more oversight, and a permanent government backstop. The scars are deep, but the lesson is clear. The system's fragility affects us all. The week ends, but the recovery is just beginning. Those were the 7 days that changed global finance forever. The decisions made under pressure shaped our world. Regulations, interest rates, and our view of risk. The legacy is complex. A deep recession, but a worse depression averted. The crisis forced a reckoning with financial excess and led to sweeping reforms. Understanding this history is crucial for navigating today's economy. If you found this breakdown helpful, hit like, subscribe, and share your thoughts below. How did this week affect you? Let me know in the comments. Thanks for watching. See you next time.